All I'm saying is I've never seen a valid argument explaining why we can't just print more money.
If monkey have one banana, banana rare, banana valuable. If monkey make more banana, banana not rare, banana not valuable.
What's going on, guys? It's K-Dub here with another episode of Crypto Zombie. Welcome back to the channel. Hope you're having a great day today. Now, we have had some very, very interesting things developing in the Bitcoin chart related to the news that we got, related to the stocks. If you see what happened right here, we had the unemployment rate coming in lower than expected at around 3.5%. While 3.7% was expected. Now, why did stocks dump on this news, right? It sounds like that should be good news. Unemployment rates are coming down. Well, the problem is if the Fed doesn't really feel a reason to start lowering these rates, like, hey, unemployment's going down, right? So no harm, no foul there, right? They're, like they said, they're focusing on inflation. And they're focusing on employment, the jobs data that came out. And you can see right here, we actually had this big dump on the S&P. Now, this is the really weird part, just to point this out. So you could see the S&P right here, it came down about 2%, but on the whole day, we have 1.8%, right? So a 1.8% move. Now, let's have a look at what Bitcoin did in the exact same period. Bitcoin fell about 2.1%. That is absolutely crazy. Normally, when we see moves in the S&P, in stocks, generally, Bitcoin is somewhat correlated, but we see much bigger moves. We're not seeing that right now. What does that mean for Bitcoin? Is Bitcoin starting to actually, break away, or are people looking into Bitcoin? What is happening right here? Well, the interesting thing is that the Dow Jones is now officially more volatile than Bitcoin. You can see right here compared to the 10-day realized volume, right? So moving on and talking about something that I had expected was volatility. We really didn't get the volatility in Bitcoin. In fact, in my previous video, I said expect volatility. Stock market certainly got it. Bitcoin really didn't get it. But if we actually have a look at what's going on right here, look at the estimated leverage ratio on all exchanges. And this is going back to April 19th, right? And we know that the higher this gets, usually you tend to get these crazy moves, right? You can have a short squeeze, you can have a long squeeze, but ultimately you are expecting that volatility moving forward. Another thing that we need to talk about is that we did in fact break through this on the linear, right? Now, obviously, if we switch it to the log chart, no, we're not, close to this downwards trend just yet, but, switch it back to the linear and you can see right here, we have in fact crossed it and we have retested it, right? But yet, it's crickets. It's quiet right now. So there is a lot to be expected. I'm going to go into all that. And on top of that, we also have some news about the UN actually issuing a warning, pretty much, to central banks and to the United States Fed, saying, hey, you really need to halt these rate raises because you're going to potentially cause massive disruption. Now, today is going to be more of a big picture. We're going to go into the charts, obviously, but I'm going to be traveling next week, so I want to leave you guys with some really good content to think about. And the problem is as the Fed is strengthening the dollar, we're seeing a massive disparity with the dollar compared to other assets, including currencies as well, right? And it's not just Bitcoin, it's not just gold, it's not just stocks, it's other currencies, it's everything right now because of how aggressive the Fed is being, whereas you're not really seeing that same sentiment in these other major countries, right? So what you don't want to get is a death debt spiral, which is something that we do need to be concerned about. So lots of major topics we're going to go into today. You guys are definitely going to appreciate this. Slap a like if you enjoy this type of content. Of course, we are going to have a look at the chart specifically. I will start here first, but I want you to stick around and really look at what's happening. So ultimately on the chart right here, you can see that, we've had this point of contact, we got rejected, but, could this be a fake out? It's possible. But look, if I zoom in right now, what are we doing, guys? What are we doing? We're potentially retesting this as support, right? This is a very good area potentially for that move, right? Is it fully confirmed? Well, I would love to say that it is, but in my opinion, it is the weekend, and I don't trust weekend price action for Bitcoin personally. So we do have to see what happens, but this is not something that can be denied at this point. We have broken it, and for the first time, we've actually technically tested it as support. So you could say on the short term, maybe that's actually a good thing, right? Because it is a very legacy trend line. However, remember, it is linear, right? Most of the charts we look at are logarithmic because, long term, that's really how most people chart Bitcoin, right? On the shorter level, it's almost like we're putting in the same pattern over and over and over again, right? You can see right here, we make this triangle, we break out. We make another triangle, we break out. Is that what we're doing right here? Are we forming another triangle? We could be. I mean, would they really attempt to do this 3 times? That is a possibility. But you can see that we are continuously putting in higher lows on this lower time frame. This is the 4 hour, right? And you can even argue that we're putting in higher highs. Now, I know some people might be a little bit scared about looking at this because, if you kind of, trim the fat off the top and the bottom, well, what does it kind of start to look like? It kind of starts to look like you could be forming a bear flag, right? Which could end up sending us a lot lower. But as we've seen, not every bear flag actually plays out that way. For example, if we look at this one, so look at all these that we had here, right? This was an obvious bear flag right here, dumped hard, bear flag, dumped hard. But then right here, we just had a very, kind of a larger flag, but then we didn't really dump. We sort of just consolidated into this bigger pattern, right? So you could really just argue now we're just bouncing around in this area. So what do we need to do ultimately? Well, really on the short term, you just want to break and hold above this level, right? So if Bitcoin can actually get above $20,360 right here, that would be great. And of course, getting above the previous all-time high would be nice. We're sitting about $400 below that as well. But yeah, I mean, at this point, we're just kind of creeping up here. Is it a place to put the trade in? You can, but I would wait to see what happens potentially on Monday. Obviously, if you guys do want to trade, you guys know there are bonuses below. I do have a tutorial popping up above. Definitely check it out. I like to take the opportunity, especially during bear markets, to learn about different types of things. And yeah, I mean, pretty much the boring bear market actually of 2018 and 2019, side note, is really where our trading abilities ramped up. It's actually where I learned the most about trading was during the previous bear markets, actually, because in a bull market, you don't care, you just long it, right? So definitely check that out if you guys want to learn. But those are the basic key levels that we're looking at, kind of waiting for Monday. And you can see, we do also have this downward sloping trend. This is a smaller one, but this one we have not broken yet, right? So we did break the large one, which is more important, but as you can see right here, we are going to eventually come to this apex. So you would assume the breakout would happen on October 13th. Absolutely, the latest would be October 15th, because then we would be completely outside of this, right? So the only way that we could be saved from that point is actually coming down and retesting some of these lower levels. So I would say that combined with the leverage that we're seeing right now, and having a look at where we are right here, like I said, you maybe have 1, 2, 3, 4, one more week, one week maximum before we are going to have one of these. Well, hopefully not this move, but something of this nature, a big candle, a big breakout, and then we could look to get back to some of these previous levels. I do have the main target at 22,475, and that's this level right here. And that level also coincides with this upward sloping trend, but keep in mind, as time goes by, that level gets higher and higher, right? So at some point, I'm just going to erase this probably. I'm just going to actually delete all my lines on here, because at some point, it's not really going to matter that much, right? We are still in the falling wedge pattern. We are still being, once again, look at this confluence. I mean, no matter how you look at it, giant falling wedge pattern. This is on the log chart, right? And, obviously you switch it to the linear, then you also get pretty interesting confluence right here and this line that we spoke about right here. But, ultimately, guys, we need to break above this level, right? And we need to break above this previous all-time high, because unfortunately, if we don't, the next level of support on the weekly is around $16,200, right? That really is the next major area of support. Obviously, I hope we don't go down there, but it is a possibility. And as I've pointed out before, we are still being supported so far by this 89 EMA. You can see right here. Let me just get rid of the drawings. Okay, I don't have to draw on it. You can see right there, lots of support. And that is still sitting at around $18,271. Now, we did see the dollar have a rebound at this very significant level, right? So it's pretty much every time, we think it's over, we think, that the dollar is falling. What does it do? It just keeps moving. It just keeps moving, right? So the dollar continues to be strong. So if the Fed does continue to raise rates and cause this global pain, could we have one of these low targets, right? This $12,480 target, if you look at realized price of wallets that have between 10 and 100 Bitcoin in them, this is like a whale level. This is another one. We did 2 of them in the previous video. It could be possible. That's like the doom and gloom scenario. But let's not go there just yet. Let's talk about what's happening, because we have the UN calling on the Fed and other central banks to halt interest rate increases. You can see right here in its annual report on the global economic outlook, the United Nations Conference on Trade and Development said the Fed risks causing significant harm to developing countries if it persists with rapid rate raises. The agency estimated that a percentage point raise in the Fed's key interest rate lowers economic output in other countries by about 0.5% and economic output in poor countries by 0.8% over the subsequent 3 years, right? And without going into this, really, what is the purpose of this saying? Well, I just want to point this out, right? So this looks like the Bitcoin chart, right? It looks, you would say this is the Bitcoin chart. It is, but it's the Bitcoin chart in euro. Now, Bitcoin in dollars right now is down over 70%. I don't know what it is today, 74% or something like that. But going down from top to bottom in the euro, Bitcoin is only down 66%, right? This, which means that, I mean, it's not performing well, but it's performing better, right? If you were, comparing it to the euro. So the reason that this is happening is because, as you can see in this very simple chart right here, the US is pretty much the only ones right now doing this super aggressive rate raise, right? They're the only ones that are doing QT to this extent. You could see compared to Canadian dollars, Australian dollars, euros, British pounds, and Japanese yen, it's completely going in two separate directions. The US is doing something totally different and the rest of the world is doing something else, right? Now, the thing is if you can see what it's doing to these, imagine what it is doing to third world countries, right? So the dollar is getting stronger compared to these currencies, but at the same time, it's creating a massive disparity. And, these guys are going to get angry at some point because you're basically devaluing our purchasing power, right? And at some point, I'm not saying we're at that level yet. Why wouldn't they just say, you know what? We're just not going to use the dollar. How about that? I'm sure it's much, much more complicated than the way that I'm explaining it. But we did see the BRICS countries coming out and saying, hey, if this continues, we'll just make a basket of our own currency. We'll just create our own way of trading. Obviously sanctions in Russia, they're saying they don't need the dollar, right? China saying they're going to dump the dollar to buy more of their own. This is something very serious. So what good is it if, you have all this power, you're the strongest currency, but nobody wants to play with you, right? Like, what if you're like the strongest person, right? But nobody picks you for their team, right? Okay, well, you can just go sit there with all your strength, but we're going to play our own game over here, right? Now, here's where the interesting part comes in. We know that there will be a Fed pivot. Now, there is going to be a lot of repercussions, clearly, right? This isn't going to just end. What they're doing today takes about 3 to 6 months, and they're not waiting to see those changes, right? They're just raising rates, and they're looking at it month to month to month, except the problem is that what we're seeing today is actually the effects of things that have happened 3 to 6 months ago. However, when we do have that massive break, and it's happening. It's going to come. I don't know if it's this year or next year. I don't imagine it being any longer than 2 years. I know some people are saying it could be 10 years. I don't think it's going to happen because I think once they put the brakes on, I think they're going to slam the brakes the same way that they, reversed the other way. And they're going to have to come back even harder with the money printing to fix this problem. There's more on that in a bit. But getting back to Bitcoin and why I do believe in Bitcoin, like Alex Tapscott was talking, he's over at 9 Point Partners. He's saying during the ongoing financial crisis, most of the stable and safe haven assets have suffered equally, right? Of course, Bitcoin always gets hit harder percentage down, but we know when it goes up, it usually goes up higher, right? In periods of extreme financial strain, the US dollar rises at the expense of all other assets. Most typically, stable investments like government bonds, blue chip equities, and even gold have suffered, and Bitcoin has been no exception. However, Bitcoin is still a good addition to a well-diversified portfolio. It is historically low correlated and track record of outsized returns make it suited for long-term investors' approach. And Nick Saponaro, CEO at Divi Labs, which I actually had a chance to meet him one time in Vegas, pretty cool guy. He says it is not uncommon for stores of value to take a hit early in a recession with late-stage rebounds. However, I wouldn't be surprised to see commodities like gold and Bitcoin rebound before most other assets once we are deep in the thralls of a recession, right? And if you look historically, we usually do start to get that rebound even while we're technically still in the recession, right? Which is most likely where it's going to end up heading if they continue doing what they're doing. But how can they continue doing what they're doing? I want to show you something really interesting right now. And I know you've all seen this and you're like, okay, so what? The US debt? Yeah, we get it. It's over 31 trillion. So yeah, that's pretty freaking bad. It was literally like 27, like the last time we checked. But here's the thing. How does the US make their money? What is the Fed, the government, right? They print, okay, they can print money, but it's taxes. So we're seeing the national debt increasing. They're raising the rates. They're making it more difficult to borrow money. Eventually, maybe not right now, but eventually at some point, we will start to see unemployment rise, right? Less people that have jobs, less taxes to be paid. Also, less people making money, right? If I'm not making money in stocks, and I'm not making money in crypto, and I'm not making money in real estate, and my business is suffering, and I need to write off the costs, well, guess what? That's not taxes that are going to be paid. Check this out. Come over here. U.S. federal tax revenue. Look at this. What is this number doing, guys? Is this number going up or down? This number is going down. This number is going down, which means that the U.S. federal tax revenue is going down. They are making less money from their citizens, basically, as they continue to do this, right? So they don't want to do that, essentially. Like, I'm kind of explaining it like a 5-year-old, but if they continue doing what they're doing, it's going to directly affect the tax revenue. And we know that they're not going to be happy about that. And then what's going to happen? Well, once the liquidity dries up, and we have something like a Credit Suisse situation that could be going on right now, will they actually step up and bail out whoever this entity might be? Or are they actually going to hold their hawkish stance still and let the economy crumble? I don't think so. And I did like this interview that Bitcoin Magazine had with Greg Foss. And he was discussing, this is a little bit more, he talks about more than just specifically what I mentioned, but he explains the possibility of this death debt spiral. And it's very interesting the way that he breaks it down and how they literally cannot keep doing what they're doing. And the only reason that they're able to do what they're doing is because they are central banks. That's it. If this was anyone else, something like this could never have happened, right? By the way, side note, if you don't follow Greg Foss, this guy's awesome. He is the guy that has the prediction of Bitcoin going to $10 million, and he has like all this math that he, it's really interesting. I'm not going to play that part, but check this out, guys.
Guys, it's like running a business. If you ran your household this way, if you bought another credit card or applied for another credit card to pay the interest on your last credit card, how long would that Ponzi last? Well, this is exactly what the USA is required to do because of the debt spiral. Now, I'm going to have to say it again. If you don't understand the math that I just laid out on the table for you, please take your money to a professional asset manager. And I'll have to say it again as well. If you do understand the math that I just laid out and you don't own Bitcoin, you are not the smartest person in the room. In fact, you should probably also take your money to a better asset manager than yourself. So all paths lead to Bitcoin. All paths lead to QE infinity, the necessity of the governments to continue to print money to solve the organic expansion of the debt balloon. The organic expansion being due just to the coupon payments. Incidentally, there are people that think Powell's going to get to 6%. Well, if at 3%, it's $1 trillion a year. At 6%, it's close to $3 trillion of organic growth in the debt balloon. Guys, it's fucking over. Can I not explain it any other way? This is a debt spiral that if the USA were a corporation, it would be rated CCC, one level above default and the lowest level of a continuing business in the junk bond arena. Don't forget, I spent 30 years in the junk bond arena. I'm paid to identify companies that can make it and companies that are unlikely to make it. Well, if the USA was a company, it ain't going to make it. Now, the ability to print money skates you out of a lot of problems. But if you were a corporation and you printed your own money, guess what? You get thrown in jail for forgery, wouldn't you? But in the US Treasury, if you print your own money, you get promoted. You get a bigger job because, the money printing machine solves all problems. It only works until it doesn't, you guys, okay? And that's what I have to stress. Risk happens fast. It is very concerning when a major nation, the largest bank in America, Bank of America, comes to the research platform and says the US Treasury market is fragile. The liquidity is evaporating.
At some point, it will reverse. And when it does, we are going to most likely enter the biggest up only that, you thought it was bad what we saw before. It could be even tenfold that, right? And eventually that is what is going to happen. Now, on the short term, I don't want you guys to get excited. We are going to have these bear market rallies, and we are still in a bear market. We're not out of it yet. These are just, Tom Dunleavy actually pointed out, this is the S&P. These are multiple, 20% rallies for the S&P in a bear market. Now, I know Bitcoin's been a little still lately. I am anticipating some volatility, but, we could see Bitcoin, and I have showed you this on the chart, we could get back to 28,000. We could get back to 30,000, right? And everyone would be getting excited saying we're going back to the moon, only to then have, that correction. And of course, as you guys know, you really don't want to have too big of a move too fast because that's not healthy either, right? I think consolidating right now, in fact, having a boring sideways market for a couple more months would be probably the healthiest thing for Bitcoin, although a lot of people would lose interest, but that would be the best time, right? And I believe now is a good time, not financial advice, of course, but I mean, you can literally buy Bitcoin for cheaper than the all-time high of 5 years ago. So it's like literally buying Bitcoin in 2017. All these people that missed out and said they didn't have an opportunity, now's the opportunity, but yet everyone is scared because it might go lower. Okay, it might go lower. It might not go lower. You know what I mean? The bottom might be in, it might not be in, but you're already getting a 70+% discount in US dollars. I don't know. Also to point out, Bitcoin's hash rate has grown 3 times since the China ban despite crypto winter. So, this may not mean anything to most people because, well, how do I make money off of hash rate? Well, you don't. But what it's showing us is that the network is the strongest that it's ever been. You have all these global macro things happening, but fundamentally speaking, when we're talking about Bitcoin, this is only showing us that the network is the strongest that it's ever been. Bitcoin is continuing to do what it does every single day, block by block, and innovation is still happening, right? DeFi is still growing. Ethereum is, they had the merge. Ethereum is working towards eventually, lowering the fees. And on top of that, there's a lot of other projects that are also coming out right now in a bear market that really a lot of people aren't talking about. And just kind of ending on some crazy news, this is like a bit of a side note. So if you guys saw what happened with Celsius, so they produced a trove of documents this week containing creditor information that has some worried they may be left vulnerable to cyber threats. So the judge ultimately did redact the customer addresses, but now there's pretty much this document that everyone can see that has all the names of the people and all of their money that was involved in this. Now, I've never used Celsius personally. I never promoted Celsius. It's not anything I've ever talked about on my channel. The same way that I never talked about Luna on my channel. I tend to steer clear of these potentially dangerous situations for people. But nevertheless, kind of crazy that they're able to do that. And I guess the reason for this, from what I'm understanding, is because the way that it was worded with Celsius was it wasn't necessarily an investment. It was pretty much you were their unsecured creditors or something like that. Like I said, I'm not involved in this, so I haven't been keeping too much close detail on it, but that is nuts. That is nuts. They just doxed all those people. And yeah, I mean, just be careful if you were one of the people that were affected by this. Be very careful if you do get, maybe a hacker can find out what your email is and send you a fake phishing link. Always verify everything you're clicking, know what you're clicking. Yeah, and be careful of, scammers out there, guys. But I do want to just say that I am going to be traveling next week, so it might be a little hard for me to make videos. This is why I want to make more of a macro type of a video today. Not focus too much on the small price action, just look at the bigger picture. Also look at the macro as in what's happening globally with all this stuff. And, just going back to, where's that image that I had? Was it right here? No, just going back to this right here. This is crazy. And this is something that is I could see this really pissing off a lot of countries. Like, hey, we're trying to, control some stuff over here. And the US is like, nah, we're just going to go stronger. We're just going to make the dollar stronger. And I mean, it's pretty crazy when you have, basically the UN coming out saying, can you guys chill out? Maybe give it a couple months, see what happens, right? Before you just continue. But there are a lot of people that are estimating, this could be good or bad as the news comes out, that this may be the last of the 75 basis point raise, and then they may go to 50, they may go to 25, and then they may just do nothing for a little bit, leave them where they're at, right? And if they do leave them where they're at, right, and they stop raising them, well, we already know what inflation is going to keep doing, right? So it is one of those crazy things. And yeah, they do want to avoid a death spiral. And as I said, they also would like to, make money in tax, and they don't like when this number goes down. So that's basically it for me, guys. I hope you enjoyed this video. A little bit more macro, right, for the Crypto Zombie channel, but there's a lot of stuff going on, and it is a good time to be alive and learn. Honestly, it sounds crazy, but I'm actually happy that we are getting the opportunity to live through something like this, because the lessons that you learn and the potential gains, not to be that guy, that will be made once this all comes to an end, and it will come to an end. And everybody says it's different this time, and it is different, but it's not different, guys. We've had civilizations collapse and rise and all this stuff in the past. The US has gone through multiple recessions. Remember, I broke you down that chart, and every single time it's the end of the world, it's doomsday. And it always resumes itself. It always goes back to the uptrend. And if you look historically, at the end of the day, it really is an up-only environment long term. And I believe Bitcoin is going to be one of the fastest, if not the fastest horse in the race. So that's just my opinion. If you disagree with me, totally cool. That's why they're called opinions, because they're like, everyone has one, and most of the time they stink. So that's it for me, guys. Thank you so much for coming back to the channel. I love you. You're awesome. Remember, if you guys are going to learn to trade, I highly recommend my tutorial. I put a lot of time into it. I think it's a great video. And if you do want those bonuses, 16,000 below, check it out. My name's K-Dub. This is Crypto Zombie. Until next time, stay crypto. And of course, peace out.